Hello and welcome to the Advanced Forex Trading course. I'm Adam Khoo, your trading coach and trading mentor. And I believe you've purchased this course because you truly enjoyed the basic Forex trading course and you're using the first two techniques, the impulse pullback and impulse pin bar strategy. And I believe you're using this new course because you want to bring your Forex mastery to the next level. So indeed, in this course, I'll be showing you more advanced Forex trading strategies so that you've got opportunities to find more high probability trade setups under different market conditions. And you can then increase your income streams as a professional Forex trader. So let me get started by giving you a bit of an overview of what we're covering in this course. So for the next three lessons, lesson 2, 3, and 4, we'll be covering three new, very powerful Forex trading strategies. The first would be the moving average bounce strategy, where basically you're going to be trading with the trend, right? Going long on the uptrend, going short on the downtrend, and knowing exactly when to enter when the price retraces to a support level, where it bounces off the moving average. You'll be then learning my news scalping strategy. This is a strategy where you're able to enter and exit a trade usually within 1 to 3 minutes and make extremely high returns on your capital by utilizing high impact news events. And finally, you'll be learning how to trade when prices are in a range, how to trade the range for currency pairs. So before we go into these advanced strategies, it's really important for you to, number one, go through an overview of the technical techniques and signals you have learned in the basic course. I'm going to review that and go a bit deeper into that, as well as introduce you to some more advanced technical strategies that we need to trade these strategies. So we'll be looking at, again, understanding support and resistance in price structures, which is really important. Understanding, again, the role that moving averages play, and how do we read moving averages, how do we use them to determine the strength of a trend, to determine support and resistance levels. You also learn, again, the importance of looking at higher time frame analysis to ensure higher time frames are aligned with the time frame you're trading in. We'll also go into understanding the impact of news and how it impacts prices in currency markets. And finally, understanding how to use Fibonacci retracement tools to increase your probability of trades, to find additional confidence in trade setups. So I hope you're ready, I hope you're excited, may the markets be with you. Let's get ready on this journey by going to these advanced technical analysis signals. Alright, so let me talk about the importance of identifying support and resistance levels on price charts. So first, let me define support and resistance. Support and resistance are price levels where prices tend to stop and reverse direction. So for example, a resistance level, let me write down resistance level, is a price level where the price tends to move up, and when it reaches a level, it tends to stop and reverse back down. Okay, again, it goes up, reaches a certain level, it goes back down, goes up, reaches a certain level, goes back down. That is known as a resistance level, or like a ceiling. Okay, so this is the resistance level. So why does resistance happen? You can understand the psychology behind resistance is that at this price level, for example, this could be 1.2850. As you can tell, that's my favorite number. Okay, you can buy the lottery on those numbers. At this level, it tells you that supply exceeds demand, or in other words, there are many sellers that are queuing and waiting at 25 or 2850. So the moment the price goes to that level, there's a probability it will stop and reverse back down. That's known as a resistance level. So conversely, what's a support level? A support level happens when the price goes down and reaches a certain level, stops and changes direction. Goes down, hits the level, changes direction, goes down, reaches the level, changes direction. And that is known as a support level, or like a floor that supports the price. So say this support level is at a price of 1.2800, for example. Okay, So again, why does this support happen? Psychologically, it's because there are many buyers that are queuing at 2800. Demand exceeds supply at that level. So the moment the price goes to that level, there's a probability it will stop and reverse back up again. So that's the psychology of support and resistance levels. Okay, so the first question would be, how do you know when a resistance and support level is reliable? Okay, so one of the measures I use is I want to ensure that a resistance level or support level is tested at least 3 times for it to be reliable to use. So it means the price must go up to a certain level and it goes to a level, it comes down, that's what we call one test. Goes up again to the same level or close to that level and reverses down, that's test 2. Goes up, comes down, test 3. So again, I want to see a level tested at least 3 times for it to be a significant resistance level. If it is tested 1 and 2 times, it is a potential probationary resistance, but the third time is the confirmation of resistance. Similarly, for support, it has to be tested at least once, twice, and preferably again 3 times for it to be a reliable support level. Okay, now some people say, Adam, besides horizontal support and resistance, there are also trending support and resistance on there. For example, you have a trending support line or a trending support line or trending resistance lines. Yes, you could draw them, but I do not draw them because I find that trending support and resistance, the ones that are diagonal in nature, are very subjective, and you see what you want to see, and 5 different traders will draw it very differently. And if it is not that objective, it's very subjective, I don't find it reliable. So personally, I only trust horizontal support and resistance levels, especially for currency trading. The other thing to understand is that when I say it's reliable, it's a matter of probabilities. So once there's a resistance, for example, at this level, at 2850, it doesn't mean that if the price goes to 2850, it must stop and come down. Okay, as you know, in trading, there's no guarantees. There are no guarantees, there's no certainty. It's only a probability. So there's a probability it will stop and come down, but it's definitely not a certainty. Okay, so as traders, we want to take high probability entries. In other words, we want to buy when the price hits a support level that is strong, and we want to buy at support because there's a probability it will go up and we can make some quick profits in pips as it goes up, right? So we want to buy at support levels, okay? Similarly, when a price goes up and hits a resistance, we want to be a seller at that level. So we're going to sell at resistance, we're going to buy at support. And this is especially so for the strategy on trade the range, which is one of the strategies you learn in this course. Okay, so again, if you sell at resistance, it's not a guarantee it will come down. It can always break the resistance and go up. If you buy at support, it can break support and go down. So it's only a probability. And as you've learned in course 1, you can't be right all the time, and you don't have to be right all the time. As long as you are right half the time or slightly more than half the time, with a good risk to return ratio, you'll be very profitable. So when you're wrong, you lose 1 hour. When you're right, you make 1 hour, you make more than 1 hour, right? You make 1.5 hour or 2 hour. And that's our whole point here, finding areas where there's a probability of a price reversal. So that's resistance and support levels. The other important thing to understand about resistance and support is that it is not a defined line per se. It's more like a zone. Okay, more like a zone. So what do I mean? Let me draw it one more time. Okay, so a lot of people think that resistance is a line like that. That's resistance, right? Resistance. And support is, again, another line like that, support. And they think that prices move within these 2 lines like a brick wall, right? Goes down, hits the wall, goes up, hits the wall, comes down. Yeah, only in theory. In reality, this rarely ever happens. Okay, so many times what happens instead, let me just redraw that. So in reality, what happens more often instead is that this line is more like a zone, which means the price can go up and it doesn't exactly touch and come down. It can go a bit above that and come down. Similarly, it may touch support here, go up, and sometimes it may not even reach that line. It may fall short and come down. And again, it doesn't stop exactly at that level. It could pierce below that level and go up. And like so. Okay? So when you use support and resistance, always understand that it's more like a zone. Doesn't exactly touch the point and come down. Okay? It can go beyond that point and come back down, beyond that point and come back down, right? So like a zone over here. So you got to always give a buffer. Okay, so for example, if the price comes down here, right, and you buy, for example, you buy here, and you think, hey, this is a support, it's going to go up, right? I'm really certain it's going to go up. So what do? You buy over here, and you place your stop loss here, for example. Okay, sorry, let me do that again. Okay, let's use this example, right? So the price is coming down, coming down, coming down. You say, okay, it's going to hit the support, it's going to bounce, right? So I'm going to buy at that level. So you're going to buy there, and you're going to place your stop loss below that support level, like most people teach in most books, right? But the trouble is the market likes to screw you. Okay, so what happens is you buy there, and sure enough, it will go below the support, it will hit your stop loss, and you end up selling for loss, right? You bought there, you sold there for loss, and the next thing you know, it goes up again. And you go, damn, what happened, right? The market's out to get me, I'm really unlucky. No, it's not that you're unlucky, the market's not out to get you, that's how the market is. So you have to ensure that if you buy there, you have to give buffer to the fact that the price will continue going lower than the support by a buffer, by a zone. So you must ensure that you place a stop loss far enough away to give it some room to go beyond the support and bounce back up again. Of course, it can still fail. I'm not saying it's going to definitely go up, but you have to give some buffer. Similarly, if you do a sell over there, if it's going to resistance and you're saying, okay, I'm going to sell over there, right? I'm going to sell over here, okay? You have to put your stop loss far enough because the price will not stop exactly there all the time. Sometimes the price will go a bit beyond that resistance and come down. So you got to give a buffer. You got to emphasize, you got to give a buffer zone. All right, now you may say, okay, how much is that zone? How much buffer do I give? In general, I would say between 8 to 12 pips. Okay, 8 to 12 pips. If you're trading the 15-minute candle charts, which is the time frame which I normally trade. So obviously, if you're trading the hourly charts or daily charts, then it'll be very, very different, right? So it depends on the time frame. So for 15-minute candles, 8 to 12 pips is the buffer which I give. And you may say, why 8 to 12 pips? I'll explain it in a short while why. Okay, so let's take a look at the charts and see if we can find these support and resistance levels, or how do we identify these support and resistance levels. So again, notice I'm using my MT4 charting software. I'm looking at 50-minute candles. So let me remove these drawings. Okay, and let me start by going to the first pair, which is Euro USD. Okay, now oftentimes you find support and resistance levels when the price is going sideways in a consolidation. All right, so oftentimes when it's in a very clear uptrend or clear downtrend, you don't really see much support and resistance levels as much. You want to see it in a sideways pattern. Okay, so over here you can see that the price is pretty much on an uptrend. Okay, so I don't really look for support and resistance at the level. And again, how do you know it's a clear uptrend? Well, the clue is in the moving averages. And I'll talk about moving averages again in a short while. But just to give you a heads up, right? On a very clear uptrend, you'd find that the moving averages are sloping up. They are sloping upwards, okay? And they tend to be in a certain sequence with the smallest moving average on top and the biggest moving average below. So this blue line that you see over here, this thin blue line, is the 18 exponential moving average. Oh, that a really ugly 18. So let me draw that again. This blue line is the, is the 18 moving average, 18 EMA. The blue line, the thicker blue line, is the 50 moving average, and the red line is the 200 simple moving average. So it's exponential, exponential, simple moving average. Now this red line is the 6 moving average, so 6, 18, 50, 200, okay? Now, for the advanced strategies, I'll be using mostly the 18, 50, and 200, not the 6. Although we use the 6 a lot in the impulse pullback and impulse pin bar strategy in the basic course, but for this course, I'll be focusing on the 18, 50, and 200, okay? So again, notice that on a very clear uptrend, the 18 is above the 50, and the 50 is above the 200, and they're all sloping up in sequence, 18, 50, 200. That's a very clear uptrend, okay? So that's how you identify a trend. I'll talk about it again later under moving averages, okay? So I want to find a period when the price is moving sideways. Again, you can see it's a very clear uptrend here, right? Clear uptrend, it's sloping up, sloping up, sloping up. Okay. Now over here, let me zoom out a bit. Okay, over here, this portion here, can you see that it's no longer on a clear trend? It's no longer on a clear uptrend or a clear downtrend. And a clue is when the moving averages are not sloping up nicely or not sloping down nicely. They're kind of like, the moving averages are kind of like moving sideways, and they're crisscrossing each other. All right, so the blues on top of the red, the blue crosses below the red, goes above the red. It's kind of like, you know, it's like crossing each other like that. You know, guys, can you see my hand gestures? Okay, so the moving averages are moving sideways and crisscrossing. The price is pretty much in a consolidation phase, moving sideways. But when the moving averages are sloping up in a very nice sequence, like a rainbow, right? 18, 50, 200 is an uptrend, okay? Sloping down, 1850, 200 is on a downtrend. So this is a sideways pattern. And sideways pattern is when the support and resistance levels are very, very clear, okay? So let's see if you can identify how do you draw them. So using the charting software, I click on this line here, which is the horizontal line, okay? And again, I can double click and I can move it and place it where I find a resistance or support level, okay? So I would place it somewhere there. Again, I can zoom out so I get a better look at it.